Hey, what's up everybody? Welcome back to Wealthy Sailor. Today's going to be a little bit of a different format from the videos you might be used to because I'm just providing news that are happening in the financial world over the last week or two and stuff that is going to be happening later on in the month. Uh, the reason I want to change up the format a little bit is because although I like talking about different things that I've learned and everything like that, recently stuff has happened that's actually caused me to change my financial plan a little bit. So I want to talk about that. Now, I like to start the video by saying I'm not a financial specialist or advisor or whatever. I'm not an expert on any of this. I'm not advising anybody to do this. I'm just letting you know what I did, why I did it, and what I think is going to happen, which was what motivated me in order to make these changes. So first, let's talk about Dogecoin. This is now my third video I'm mentioning it, and the reason I'm mentioning it is because a lot of people are talking about it. It was kind of unknown up until the TikTok thing happened, and then it shot up, and then it came down, but it didn't come down all the way from where it started. So when all it started, it was hovering around 0.0017. It shot up to about half a cent per coin, which is pretty good. But then it came back down. Now, when it came down, it kind of came down to about 0.003 ish. And it's been kind of fluctuating in there. Well, it's been slowly going up and down. It pretty much goes up around the weekends, and then it goes back down during the weekdays when the regular market's open. The only thing I can figure is that when the regular markets are closed, people still want to invest in stuff. So on the weekends, they resort to cryptocurrencies and stuff like that. Now, which is interesting because the precious metal markets have both gone up. Both gold and silver are really good right now. Now, usually the precious metal markets act inversely to the common stock market. Not always, but a lot of times it does. So to me, to see cryptocurrencies start to go up, and I mean all the cryptocurrencies, let me rephrase, all of the big name cryptocurrencies, like the top 10 that I track, because there's like 1,000, I don't track all of them. But all of them seem to be trending upwards, slowly, but they're trending upwards. Same with precious metals. To me, this is an indication that people are starting to get worried about the elections in November. I think that the stock market might reach some problems. I mean, we've been due for a downslide in the stock market anyway, because you notice over the last 3 years, the stock market's been going up, but GDP has not been going up, which is kind of not really how it normally works. It means that all the growth is 100% built off psychology of the masses, of the people buying the stocks, which is good, but normally that psychology is driven by production output via GDP. In this case, that doesn't seem to be what's going on, which to me, people think the market's supposed to do good, and it does good. The problem with that is that's how you end up getting a bubble. So if you combine those things together, I think there might be something to the predictions that in the next coming years, the United States economy might be traveling more sideways, where it's not really growing, it's not really shrinking, but it's just sort of stagnant. Because at some point, the stock market needs to slow enough, or GDP needs to grow enough that they equalize, or they're at least somewhat related. So anyway, we'll keep an eye on that, and I'll let you know what my thought process is. So anyway, based on this information, I'm not sure what's going to happen next year, and I think the election might cause some stuff, because if a Democrat ends up getting elected, it wouldn't surprise me if the primary markets, the stock markets, kind of go down, but then it's made up for when precious metals and cryptocurrencies. But I'm not sure. It's just that I can't imagine the public being too happy financially, just based on the sole fact that, stereotypically speaking, most people feel like Democrats have less support of business. They don't. Most studies show that they do not, but that's how people feel about it. So people feel less secure in the economy. They feel like taxes is going to go up, or taxes are going to go up, and they panic, and they'd rather take their money out. Now, let me be very clear. If that does happen, buy, invest, do. The thing is that when the market's panicking and everything's in a downward slide, that's your time to move in and scoop up as much as possible. Buy everything. Buy as much as you can. Just buy. If you can, hold on to any properties you have. If you can afford it, buy more properties, because if the economy goes down, slows, generally housing prices also go down, because there's usually a surplus of supply, and everybody's downsizing, which means the moderate-sized homes or the large homes, the high-priced homes, are usually left vacant because everybody has to downsize to something cheaper. So then if you have a good amount of money in reserve, you can invest in that. This is why a lot of investors will tell you, you don't always have to pick a deal. Sometimes you'll make 10 deals a day, and then other times you'll go 10 weeks without putting your money anywhere because you're just waiting for something to happen. So this might be one of those times to start looking into starting to save some money in order to buy stuff later. The consequence to that is that we're still being affected by COVID. So, some people, well, a lot of people probably don't have the money necessary in order to do that. But if you do, it's something to think about. Okay, I spent too much time talking about Dogecoin, cryptocurrencies, precious metals, and the slow downward slope of our coming economy. So I want to talk to you about some good news. Apple and Tesla both made major announcements in the last 10 days or so. And I pre-film a lot of my videos, so I wasn't really sure if I was going to make a video about this. But the reason I wanted to just kind of put this in there is because I actually bought Apple because of this news. Now, what the news was is that they're both doing splits. Apple's doing a 4-for-1 split, which means you get 4 shares of Apple for every one that you had previous to the split. Now, for those of you who don't know how splits work, splits do not give you more wealth, because if a stock is worth $400 and they split it into 4 other stocks, you don't get 4 $400 stocks, you get 4 $100 stocks. You get whatever the price of the stock is the day of the split, divided by 4. Now, why would a company do this? Because it doesn't really seem like it does much. And I'll tell you exactly what it is. They're trying to play on human psychology here. If you're the average investor, if you're the average guy on Robinhood, you might look at Apple right now, and I think it's about $4.40 as of the filming of this video. You might be like, oh, that's too expensive. I can only afford maybe 1 share. But if it's only $100 a share, or $110 a share, you can look at it and be like, oh, well, I can afford, I can put aside $220 and I can get 2 shares. So it's psychology. They feel like it's better to get more people to buy, and more mom and pop type investors, because obviously, like funds, they have no problem with it. It's really just the average person to get them buying it. Now, just a little bit about Apple. Apple has done this 5 times, and immediately after the split, they usually take a little bit of a dip, but then they always climb back up, and they climb up quickly. From what I could tell, Apple seems to like to keep their stock price somewhere in the area of a couple $100s. But if it gets too high, I think they notice that less people buy it. So you can sort of artificially inflate your stock price by creating more demand, by making it cheaper and more appealing to the average person. I'm not sure if now for stock splits in general, not just Apple, but the dividends always get adjusted for the split. So if you have any dividends, don't worry about that. You'll be okay there. Now, another thing specifically about Apple is that they've climbed 45% this year, so it's a well-off stock. So after hearing this news, I started thinking about, okay, so why are they splitting it now? Because it's going to happen August 31st. In fact, them and Tesla split are both doing August 31st. Tesla is doing a 5-for-1 split. But the reason I bought Apple was because I was thinking, the holidays are coming up, and I know a lot of people like to buy phones. In addition, you kind of have the election coming up. Not really sure how that'll affect things, but Apple I feel like is a safe buy. So I spent $2,500 and I bought 5.2 shares because Robinhood now allows fractional share buying. Thank you, Robinhood. I appreciate that. If you want your own Robinhood account, click the link below, and then you and I both get a free stock. So really help me out and help support the channel, because obviously, if I get free stock, I then can, maybe I can stop recording these on my phone. I can start recording them on like an actual camera. I record them on my phone because my phone camera is like the best camera around. So the idea is that more people will buy the stock approaching the holidays. And plus, with the holidays, you have a lot of people that give phones as like gifts and stuff. So I think that's going to cause the price to go up over the next couple days or the couple months anyway. So I bought into it with the intention of getting rid of it by the end of the year. Now, Here's why I think this is a safe bet, because I always tell you guys, don't try to time the market. Don't try to time the market. Unless you really know what you're doing, don't buy individual stocks. So I'm going to explain my theory behind this. I bought it because, one, I don't think Apple stock's going to be going down. It might stay stagnant for a little bit after the split, but it's not going to go down. I'm not going to lose my money. It might have an opportunity cost where it ties my money up in that stock where I could be making money off other stocks, but I don't think it will. So I think it's a safe bet in the long run. Now, my intention, though, is not to keep it for the long run, though I can as a backup plan, as a plan B. My primary plan is to unload it around the end of the year before the holidays, collect whatever profit I made, pay my short-term capital gains, which would just be regular income taxes, and then call it a day. But that's my plan right now, and that's why I'm doing this particular case. And I've always told you guys that my Robinhood account is sort of used for me to go after very specific, very targeted stocks during very specific circumstances. So that's what I'm doing here, and that's why I want to include this in this video, because I always tell you guys that you probably shouldn't do something, and then here I am doing it. So I'm just letting you know, here's what I'm doing, and I'll also let you know the outcome of this as we go. Okay, the cons for doing a stock split. If you lower the number, you now make it easier to buy more shares, which makes it more volatile. Volatility is, okay, so it's more for option trading. They care a lot about volatility. But the thing is, it makes it more susceptible to option trading. And a lot of CEOs don't want that, because then if it gets this downward tick, people can start shorting the stock, and then it can actually cause it to go down sort of more than it normally would, but just because people are betting on it and making money off it, it continues to go down. So some CEOs don't like to do that. Berkshire Hathaway is a perfect example. I think their stock's like $16,000 a share, and they're not splitting it because it keeps the stock nice and stable. They don't have to worry about anybody, because I mean, if you're a short seller at home, you're probably not going to try to short $16,000 in one thing. Like, that might be your entire monthly budget, or that might be several months of your budget, and here you are banging it on one single deal in one day. So it keeps people like that from doing that, which could be good, could be bad, but to be honest, it's mostly good. I'm not a big fan of option trading, but usually it's a good thing. So it's a downside when you bring the price down for that. Okay, so something else to keep an eye on, and I'm not sure how this is going to react, so I'm really curious. Apple is the #1 company in the NASDAQ, right? So if their stock price suddenly gets cut into a quarter, that could affect the entire NASDAQ, and that could also affect all of the markets that contribute to that. Once the NASDAQ starts to go down, that usually brings down the S&P 500 and the Dow Jones and stuff. Now, I don't think it will, because most people who are involved in this stuff sort of know this is coming, so they expect it. So what I would think happens, if NASDAQ goes down at all, people are just going to quickly buy up whatever, as it goes down, which is suddenly going to cause it to shoot back up. So it's going to be an option, like that day you might have a chance to buy slightly cheaper, but I would doubt it. But I don't know. I'm not an expert on any of this stuff. This is just what I've been able to put together for my research. Okay, now I want to just touch on Tesla, because Tesla's doing the same thing. As I said earlier, they're doing a 5-for-1 split. Now, I want to point this out because this kind of surprised me. Tesla currently has a larger market capitalization than companies like Disney, Toyota, and Coca-Cola. And yeah, I'm reading these off of a sheet of paper because I like to take notes for these, which was really surprising for me. They went from $229 a share at the beginning, or 1 year ago, to more than $1,500 a share. And I don't even know what it is today because I just wasn't tracking it. So they're splitting it down by 5. Now, they announced after Apple did, so I'm not sure if it's related or not. My guess is that they are not related, but it's for the same reasons. I think that it's getting too high that people aren't buying the stocks with the same volatility that they were buying years ago. So what Tesla wants to do is make it more affordable for the average person. That way we can all get in. And it also kind of goes in line with what Elon Musk, his personality, because he's very big on supporting people and stuff like that. So I would say that his personality kind of matches where I think the company's trying to go. Now, I did not buy Tesla just because since Apple announced first, I had money sitting around, so I put in the Apple. I didn't wait to hear anything from Tesla. I'm not sure which one's the better investment. I'm not sure if either of them are better investments. But this is kind of what I'm doing. It's my plan, and I want to make a video about just to keep you guys up to date on what I am planning. Well, anyway, I'm sorry this is such a long video, guys, but I appreciate you watching. If you have any comments, like, share, subscribe. I definitely read all the comments, and especially on this one, because if I have a flaw in my logic, please point it out so I can remember for next time, because I'm sure within a month or so I'd want to do another one of these like news ones. And I'll come with some creative name like Market Monday or something like that. Anyway, guys, thank you for watching. Really appreciate all the support you guys give me, and keep saving.